All right. Hello, everyone. Happy Monday. Welcome to today's weekly check-in with myself, Greta Wall. I'm your host, and I'm joined today by Derrick Oldensmith. Derrick is a professional trader with T3 Trading Group and the leader of T3 Live's ProDesk virtual trading floor. Happy Monday, Derrick. How's it going today?
Happy Monday. It's going well. P&L is green, so can't complain. We've had some good trades out there. The China move has been crazy. We've been on both sides of it. So the market itself's a little bit choppy, but there's been some opportunities today. So far, so good. Absolutely no complaints on my end.
All right, good. All right, let's take a look at real quick. This is a look at the positions that Derrick is currently holding. As again, he is a professional trader with T3 Trading Group. So you should put these disclosures out there. So he's currently long, short, and flat. So what he's been trading this morning, even if he's gotten flat those positions. All right, Derrick, we're talking about jobs this week, but also the end of Q3, the end of September, and what you can expect possibly for October. So let's get into kind of what your game plan is for this week as we lead into the jobs report on Friday. We're going to get multiple pieces of data heading into that number, of course, with that being the most important one. How are you kind of game planning for this week yourself?
Sure. So we're going to get a lot of macro updates from the market today, which can potentially have an influence on the degree to which the Fed cuts in November. So we'll see how those numbers play out. They'll almost certainly be market moving. That's pretty much the long and the short of it. This market's been interesting because ever since the last Fed meeting, we're higher, but we're not like higher with authority. There's been no, outside of the Thursday after the Fed move, there's been no major break higher. So we've kind of been very pinned and just chopping back and forth. And technically that's bullish because it allows your moving averages to catch up. It allows what I call technical equilibrium to catch up to our prices, which can act as a platform to boost the market higher. But at the same time, I'm still in a similar spot as I was a week ago, where I'm waiting for broader confirmation from these technicals that they can either break higher or actually fail. So we'll see what happens after today's trading session as we begin October.
When it comes to balancing, technical analysis and looking at the chart and then the macro picture, kind of explain how you mix all the things together, the fundamentals, the macros, the technicals, and then what you put the most stock into as a trader yourself.
Cool. Great question. So I think that everything's important in markets. When I was a new trader, when I was first getting started, I would hear a lot from like the more experienced people, like say crazy things like, technical analysis is the only thing that matters, or fundamental analysis is the only thing that matters. I think that if there is edge out there, meaning that there are market participants that are able to make money with different viewpoints, timeframes, approaches, I want to learn about what they're doing and implement that into my trading. So I am a believer in fundamentals, specifically what I call qualitative fundamentals, which means, what's the story? What's the story? What's management doing for this particular company? What's the broader story for the market? I call those more qualitative fundamentals. And then the quantitative fundamentals, I also pay attention to, where you start to look at your, PE ratios and cash flow and things like that. I also want to have an understanding of, is this company returning money to shareholders? If they are, in what form? Is it a dividend or is it a buyback? I love a good buyback in a position that I'm long for the longer term, just because I know that company is literally creating an underlying bid for me in this stock. So all that can help me to develop a thought process, higher or lower or what have you. But the technicals need to confirm it. Technical analysis is the study of supply and demand in the market. So primarily that read through is in the chart. We're studying charts all day to identify supply and demand in the market, because very simply put, buyers are what make the market move higher. Sellers are what make the market move lower. Things like a PE ratio is important, but markets can stay expensive for long periods of time. Markets can stay cheap for a long period of time. So it's the technicals that tell you how to time your ideas, how to manage risk on your ideas, and how to maximize reward on your ideas. So for me, it's a combination of all those things. And then kind of within the realm of technical analysis, I would put tape reading, which is something that I think is much less important than it used to, but I still implemented a little bit into my trading, which is just basically reading the level 2 and the tape itself to identify more real-time buyers and sellers that you're able to see. And another thing that I've really been implementing a lot more into my trading over the course of the last couple of years, which helps with both sides. It helps with giving me a bigger picture viewpoint of the market, but also a little bit with the execution, is just broadly what I refer to as, market dynamics. And this is an understanding of market maker positioning, systematic fund buying and selling positioning, what they may be forced to do in certain market environments, and recognizing that those big players who are, buying back and forth millions, billions dollars worth of stock over time, obviously have huge impacts on how the market itself trades. And I want to have an understanding of what they're most likely to do in any given situation. So for me, it's really combining all of that into strategies that I then define into game plans that I can execute in the market for hopefully consistent return.
When it comes to, this is September 30th. So it's the last day of September. So my brain, the last day of September. So tomorrow's October 1, but it's also the last day of Q3. And we start off the fourth quarter not next week, tomorrow. When you're looking back on September, how would you, grade your own trading? How do you think you did yourself? And then how different was this September, or was it the same compared to, the typical seasonality that we see in this month?
Sure. I like the question. So I missed the very beginning of September, the first couple weeks because I was on vacation. I came back the week of the Fed, and I still to this day, from the day I came back through now, from a bigger picture perspective, feel much more uncertain about the market. So before I went on that vacation, I was in 30 swing positions, something like that. Had a lot of exposure on both sides of the market. I was trading those swing positions day after day very rapidly. I decided to close out a lot of stuff. And when I came back, I didn't just jump right back into a ton of positions. Right now, as we're chatting, I'm in 12 positions. I think I had about 12 positions overnight last night as well. So I've been staying in kind of like a 9 to 13 swings right now, which is pretty light compared to how I've been while I've been waiting for more clarity from the market. But I actually feel like I've traded very, very well since I've got back. I've been doing a lot more pure day trading, like singles and doubles, pure day trading these last couple of weeks, just because I'm trying to create cash flow for myself as I wait for the market to give me further signals, bigger picture. I still do believe that the really big money in trading is made by capturing really big moves on size. And inherently, those really big moves will mean almost always that it has to be more than a day trade, unless you're trading, one of those crazy in play stocks that might go 100% in a day. We see that every once in a while. But, for the names that I tend to trade, which is a lot of those Mag 7 names, it's the indexes themselves, maybe some smaller growth stocks, but those names are not going to be moving, 100% in a day. So for those bigger moves on those names, even like NVIDIA, which I think is like one of the leading, I know it's one of the leading stocks of the year. Even NVIDIA's move, which is incredible, it didn't break out in the beginning of 2024 from 50, which at that time I think was $500, to $970 to almost $1,000 in 2 days. This was a 2 month and 2 week trade or so if you caught that entire move. So I still think that the really big money in trading comes from capturing big moves on size, and then that inherently means having to hold them for multiple periods of weeks or months or whatever. With that said, when you're in a period of time when you feel a little bit more uncertain about the market, you probably shouldn't have big positions on for a move that you don't have conviction on. So that's kind of been my thought process. I've been in wait and see mode with this market to give me more clarity. We've been holding in really well, but honestly, I still don't fully trust it for several reasons. And then I've been day trading more, like just pure in and out types of trades that I'm not planning on keeping overnight. And I've actually been trading really well with that stuff. I think today I traded 3, 6, 7, 8, 9. I don't know. I traded like 11 stocks, and some of them were multiple trades of just kind of quicker day trades for cash flow, where I'm really, timing that technical analysis a little bit better on the small time frame. And it's been paying me really well. So it's been good to see that I can do that shift. I mean, JD is an example. I've been swinging JD long. I've had a price target on this thing of $41. I've been in it for the entirety of this move. I've been in it for months. It gapped up to above my big picture target this morning. I fully liquidated that position early on in the day. And then at a certain point here, when it looked like I was going to be able to get a technical breakdown for momentum, I said, you know what, I'm gonna short this for a day trade. And that worked out really well. And then I took like a secondary trade when it retraced to this $42 area. And then that trade worked out really well. Same thing with Alibaba, traded this to the downside a couple of times. Apple's super strong, but I was able to scalp Apple to the short side, made some money on the first trade, lost a little bit of money on the second trade. Some heavier Tesla short scalps in here as well that were able to pay me some money. And then some other ones that, I'm stopping myself out quick because I'm wrong. I tried to be long Neo real quick. I stopped myself out real quick, and then it actually worked a little bit without me, but it's fine. I'm kind of keeping the risk tighter. This SMCI, I shorted it, covered a little bit, got stopped out at the new high. This is actually my more frustrating one of the day. I tried to reshort this. I had an offer out at 437 spot 99. The high of the day is 437.98. Didn't get filled, and then it worked without me. But I'm fine with that. Keeping the risk really tight on some of these day trades and getting paid big picture over the course of putting on whatever it is, 12, 15 day trades in a given day. And maybe only a few of them are actually paying me really well. A lot of them are break even. And then others, just stop me out for a small, quick loss, and I move on with it. So it's a little bit of a different approach from the way that I kind of normally am trading. And it's working out pretty well.
When it comes to October starting tomorrow and the start of Q4, kind of what are with the current market setup and where things are, what's your expectation for October? And then if you were going to kind of expand upon further into the fourth quarter, we have an election coming in November. I think that throws a different wrench into a typical Q4. So what are you kind of looking at?
Sure. So this October period has me a little bit nervous. This period coming into the election has me a little bit nervous. And it's been one of the things of my more qualitative fundamental thought process, which has kept me from getting heavier again to the long side. And in some regards, maybe it's cost me a little bit of profit to the long side, but I'm fine with it. Every single time I've traded an election period, a presidential election period in my entire career, the pattern's been the same. They've sold off into the election and bought it up after the election. So there's a lot of uncertainty out there, and I'm just trying to be patient over the course of this month of October. I don't like the idea of heavily buying things right now in case the market decides it wants to go a little bit risk off. Now, where the market thus far has proven me wrong, because I actually thought that sell-off would have began already, maybe partially it hasn't just because of the Fed cut. Where the market's kind of proven me a little bit wrong is because we had those big washouts in the beginning of August and the beginning of September that I think took enough positioning off the market that there's less selling available to drive the market down. One of the things that we like to really pay attention to, and in a big bull run, it can become like a yellow flag to me. This goes back to market dynamics, is just how are funds positioned in the market. And, from what I've seen, the big hedge funds, they're not all in. They got washed out on a lot of risk in the August and September pullback. The systematic funds are not all in. They also got washed out a lot in the August and September pullbacks. So if you have less positioning, less long positioning that's out there, that kind of means less available selling to come into the market to de-risk into an event that has uncertainty, such as the election. So we haven't had any sort of pullback really at this point. Obviously, the last week or so, we've been holding in really well. But for me, it's just an additional reason to kind of stay cautious. And then I want to reassess this market. Like, I don't mind. I've been trading for 14 years. If I decide to be lighter positioned wise for a month and a half or 2 months, or hell, even 6 months if I want, that's fine. I'm in this for the long run. This is my career. I don't need to be max positioned all the time. I'm not upset if I miss moves, because the market's an opportunity creating mechanism. If I miss a move right now because I feel uncertain about the market, I promise that the market will provide me more opportunity in the future. So I don't feel that I need to be in every single move. And right now I'm still in kind of just wait and see mode to see how this market trades throughout October to set itself up for the end of the year. In a lot of ways, I think if I can get a bigger pullback over the course of the month of October, that actually might set up a really big ramp up in the November to December period where I can make more money. I learned a long time ago from a trader that was more experienced than me, and then it's something that I've started to really notice with my own career is I think a lot of the best traders will tell you that they make the majority of their money in like 3 months out of a 12-month year. And I remember it last year in 2023, that was certainly the case for me. I made the majority of my money that I made in all of 23 in the last 2 months, in that November, December period when we washed out at the end of October and then had that really big into the year rally. I'm not necessarily expecting an exact repeat of what happened last month, but there's certain dynamics in the market when you already have an up year that tend to create a strong end of the year. So that's the biggest thing for me. A lot of uncertainty over the course of this month of October. I want to stay nimble. I want to stay on both sides of the market. I've got short swings on that have been paying me. I've got some long swings on that have been paying me. I'm day trading to try to put some cash flow in my pocket. And I'm kind of planning for the moment, unless something major changes from a technical perspective, to continue to do that really through October, and then see how things are set up for what might be a bigger trade into the end of the year.
We've talked in the past about your process and how you find the trades and setups that you're excited about, mostly swings. But in a time like now, when you're day trading more often, how does that process differ in finding day trades than finding like longer term swing ideas?
It's funny because a lot of the process is actually the exact same. I'm a big believer that even if you're just a pure day trader, you have to start with daily charts. The daily chart tells you what side of the market that you want to be on, and then the small time frame tells you how to execute it. Again, even if you are a pure day trader, you're going to have a higher probability of success if you are day trading in the direction of the daily chart, of that daily chart trend, than if you never view a daily chart and you only look at your 5-minute charts or 2-minute charts, or for some people their 1-minute chart or super small time frame, which is really never for me. So I'm always starting with the big picture and then breaking it down to the small picture. Just going back to some of the successful shorts in JD and Alibaba today, I'm very bullish on the China trade big picture, and have been. And JD and Alibaba are two of my best names of the calendar year. They're definitely both in the top 5 for me. And it's because I've been long the stocks, and the trades obviously worked out really well. But now coming into today, I'm looking at JD with like a 5% or so gap up this morning. Stock was at $29 a week ago, and now it's at 43 this morning. It's a massive, massive move, working towards 43 this morning. The ADMA on the daily chart's down at 35 and change. The 21's at 31. It doesn't matter if I'm bullish these stocks. That degree of extension says to me that there is opportunity to be able to make money on smaller time frames for kind of the cute pullback trade. And then that's exactly, what we were looking for today. And it paid out really well. So it's still going to be big picture down to small picture. But that small picture, I think if you're day trading, it just means that your execution has to be like really, really perfect. Because if your execution is off, the position goes against you initially, then your risk rewards can get messed up, or it can become too difficult to hold it for the actual move to come in.
Okay, so post the Fed cut, we have not seen a major rotation into small caps out of big caps like some would have expected. There's been some strength in the small caps, but nothing crazy. With another rate cut coming up, hope in November, do you expect that rotation to get going now that kind of the market has digested the rate cut?
So markets always move based on expectations, not based on what actually happens, right? So the reason why, in a classroom style setting, if I was teaching like an economics class or something, I would tell you, okay, once the Fed cuts rates, that means that interest rate sensitive stocks, the IWM and the XBI should move higher. But the fact of the matter is, prior to that Fed cut, everybody knew that the Fed was going to cut. So why wait until after the Fed cuts to actually buy the XBI? Why not buy it in front of it? And that's what everyone does. So therefore, you get the move into the news instead of the move after the news. And in fact, what sometimes happens is that the move into the news overshoots because everyone is looking for the exact same thing. They buy it up beyond where the stocks really should go, for example, on those cuts. So I think that's why if you look ever since the Fed actually cut, interest rates have gone up. Ever since the Fed has cut, interest rates have gone up. So therefore, the IWM hasn't traded great. XBI hasn't traded great. So basically those interest rate sensitive parts of the market just aren't trading well. Now, the same thing happens on a go forward basis. The market already knows that we're going to be cutting again this year. So they're pricing that into the IWM. The interesting part is that there is uncertainty around how fast those cuts will be. So that's what makes the economic numbers that we're going to have this week important, because the economic numbers this week will provide slightly increased certainty over time to market participants that we're going to get a 50 basis point cut versus a 25 basis point cut. And then as soon as the market starts to get a little bit more confidence on what that November move will look like, then they're instantly moving the equity market based on those adjustments. So I don't know. I've been trying to be bullish on the rotation trade. I've been trying to be bullish on the IWM and those interest rate sensitive stocks, because the bottom line is, as much as the market does front run things, at the end of the day, it still circles back to the impact of lower interest rates on the earnings and the earnings growth of these companies, which then becomes a little bit longer time frame. So I like the idea of continuing to keep an eye on these IWM names. And in the same breath, I've been looking to see if we can get some rotation out of some degree of this tech trade. But that has to happen soon. I think that once you start getting into November, if there hasn't been a big pullback in Mag 7, it becomes much more difficult to do that, just because if for no other reason, the concentration of buybacks in these Mag 7 companies. I mean, that Apple buyback's $110 billion. And then November, why am I saying November? Because November historically is the strongest month of buybacks in any calendar year. So do you really want to be trying to short Apple and fight Apple to the short side in November when they themselves are so heavily on the bid? And the answer still is maybe. If there's enough disruption to the market, you can still have selling overwhelm that inherent buying that will be there. But the bottom line is that that inherent buying is there, as opposed to right now. Most likely Apple's in a buyback blackout window in front of its earnings report. Typically, I think the FINRA SEC law or whatever says that the blackout period has to start 2 weeks before the earnings announcement. I did see some market research out of Goldman somewhat recently that said in practice it actually starts 3 to 4 weeks out. So we're probably in the Apple buyback blackout window right now, which, just everything else held equal, which is another terrible saying from economics classes at universities, means that if I was ever going to try to short Apple, I would rather be trying to short it right now in that blackout window than in November when I know that they're going to be on the bid. With that said, there's always other forces, and Apple broke out through 230 today, and it looks great. And there was positive news out this morning on the iPhone 16 Pro and Pro Max, sales or pipeline there. So Apple looks fantastic. Maybe that's not the example I should be using, but that's the general answer, I think, to your question and thought process.
All right, before we wrap things up here, Derrick, you said you're a day trader more right now than a big swing trader. Talk about some of the setups that you personally are looking at that you're interested in. Maybe you can inspire someone.
Sure. So it's like I said, it always is big picture down to small picture. I love the idea of looking at extension. So those Chinese names to the short side for day trades were great this morning. I've been really eyeing this NVIDIA, but the market held in once again today. NVIDIA 120 is really important. It gapped below 120 this morning. It's been battling it all day today. So I put on a couple cute NVIDIA shorts in that 121 area throughout the day today that have paid okay. But then in order for that to turn into something more, I need this thing to really close below 120 and then lead the market lower on a break of 115. So I really, in some ways, think it's the charts of Apple and NVIDIA that are telling the whole story right now. Apple's breakout through 230 and looking so strong, and NVIDIA being weaker and being back below 120 that are going to determine what these cues are doing. I know it doesn't directly answer your question, because when it comes to just those pure day trades, again, it's big picture down to small picture, but you need to have a playbook of trades that you've developed for yourself over weeks, months, and years in trading, and not going to be able to go through an entire playbook, unfortunately, in our one session today. But that's probably just an opportunity for any listener to become a part of the virtual trading floor that I run, which is called the Pro Desk, or become a professional prop trader with T3, so that they can actually be part of the team and see what we're doing in real time and actually participate in those trades in a better way.
Yeah, totally. And great lead in for me, Derrick. Oh, that's your screen. Here's mine. All right. If anyone wants to learn more about what it takes to be a prop trader and working with T3 Trading Group, Derrick has a free ebook all about prop trading and the benefits of prop trading. Go to t3live.com/DO live to get that. Again, that's Derrick's free ebook focused on prop trading. All right, Derrick, thank you for doing this with us today. He is a real trader, of course. He's been trading this whole time. So we'll let him get back to trading and let him focus. We will not be here next week. I will be out of town, but Derrick and I will be back in 2 weeks. Everyone, good luck with your trading. And Derrick, good luck to you as well.
Thanks, Greta. See you next time.
All right, have a great day. Bye.